So I've got 3 stocks that you should buy this week that you should be able to double your money on, so you want to stay tuned. What's up YouTube, this is Sankey from Stockflix here. Now before I tell you about these 3 buy it now stocks, do check out the link in the description, that's Trading 212. Go and grab yourself a free share of stock worth up to $100. Now I actually had someone who used the link and got a free share of stock of NEO. How cool is that? And if you saw my 2021 NEO price prediction, that should be going to above $100 next year. So he's doing pretty well. So do check out the link down below, it really helps the channel out. Now without further ado, let's jump into the portfolio and see what's going on. So guys, up on screen is my YouTube growth portfolio on the road to 100k, standing at just over £40,000, which is just under $50,000. Guys, I come on here each and every day just to show you my portfolio, show you my picks, show you when I'm selling out, when I'm buying, just so you can get an insight into what I'm doing, so you guys can replicate and make some fantastic returns. Guys, on this channel, no one gets left behind, everybody wins. Now we've had a little bit of trouble in the markets today. A lot of EV stocks are down. In general, a lot of stocks are down. So you might be seeing a lot of red in your portfolio, but that's just the stock market, guys. There's up days and there's down days, and you just have to capitalize on the down days. Like I've said before, today marks a good buying opportunity for a lot of different stocks. But today we're talking about 3 buy it now stocks. So guys, I wanted to share with you my investment strategy that I go by when I'm going to invest into a new company. And I call it the GMP. So guys, I'm looking for really high growth, I'm looking for great margins, and I'm looking for good plans, right? Good future plans. And they're all linked together. And if you break the chain, then it's probably not a good investment, right? So if we take a company that doesn't have good margins, they're not going to be able to generate profit, right? And if they're not going to be able to generate profit, they're not going to have cash to invest in their plans. If a company doesn't have good plans, they're not going to be able to diversify their revenue streams and have good growth in their top line, right? Now, if a company doesn't have good top line growth, good revenue growth, it's not going to be able to be profitable because its costs are going to rise and it's going to slowly become less and less profitable, right? So guys, I call it the GMP. It's very, very powerful, and I'm going to show you how it works. So guys, on screen is the first company I want you guys to load up some shares on. That's JD.com. Now, if you don't know them, they're a Chinese e-commerce business, right? If we go through their growth, margins, and plans, you'll see why they're a fantastic company. Now, on their growth, in their third quarter results, their revenue increased about 30%, right? From Q3 2019. So they're very, very fast growing. Now, their revenue is growing because they have multiple different streams of revenue, right? So not only do they have the revenue from selling their products to the consumer, right, their B2C business, but they also have a B2B business, right, where they essentially hire out their logistics platform, and other retailers, small, medium-sized businesses can use it to fulfill orders. So they've got all these robots, they've got all this autonomous self-driving vehicles within their warehouse that does all the packing, the labeling, and the distributing of products, and they hire that out to other businesses. So they've got multiple streams of income, and they're growing very, very fast, and they're doing fantastically. Now, on the margin basis, these guys, they're net income profitable, guys. That is fantastic. They made net income of about 1.1 billion in their third quarter, right? So that's what I want to see. I want to see a profitable business, right? And their margins are expanding, right? Because they've spent money historically on this logistics model that I told you about. They're now reaping the benefits. They're hiring that out. They're getting the revenue from that, and they are net income profitable. Now, in terms of their plans, they're still acquiring new customers for this logistics part of their business, right? They spent a lot of money on it, and now they're just acquiring a lot of customers to use that fulfillment center. So they're expecting really, really nice revenue inflows going forward. Not only that, they're really boosting their cloud part of their business, right? So they're partnering with Cloudflare, and that partnership should generate really, really good income for them. We know that Amazon have their Amazon Web Service, right? We know that Microsoft have their cloud service. JD.com also have their cloud service, but it's growing, right? They just launched this partnership last year, and again, they're looking to acquire more and more customers. So guys, the second company I want you guys to consider loading up some stock on is Roku. They're a fantastic business. This is a US streaming business. The interesting thing is streaming is still in its infancy and it's set to explode, right? So these guys are positioned really, really well for takeoff. That market almost reminds me a little bit of the EV business. EV market is just in its infancy and it's growing, right? So there's a lot of players. We know the Neos, the Teslas, the X-Ones, they're positioned well for takeoff. This is the same thing with Roku. Now on their growth, fantastic. 73% revenue growth, perfect. That's exactly what we want to see. Really, really good margins, gross margin of about 60%. That's very, very good. EBITDA positive and their net income positive as well. About $12 million, right? That's how much they produced net income in their third quarter. So Roku is a very, very good business and I'm very bullish on Roku, right? I think these guys really have the potential to add 50% to their share price by next year at least. So it's a really good one to grab some stock and position yourself now. Now in terms of plans, which is the last factor I always look at, remember I look at growth, margins, plans. They've got really, really good plans and their plans center around their international piece, right? So they're looking to expand into UK, into Canada. They just expanded into Brazil earlier this year and they're performing really, really well there. So there's a lot of markets for them to capture and they've done it in one market, the US. They know how to grow, how to scale and how to become profitable there, and they're just going to replicate that in different markets. So Roku is a fantastic company. Guys, do your diligence on them and consider adding them to your portfolio. So guys, not every situation can we use our GMP, and the next one just shows that. So this is a good bounce back stock that I want you guys to really consider getting some stock in, right? Now's the time where we should start introducing these companies to our portfolios before they take off, right? So we've got Royal Caribbean. Guys, I want you to put Royal Caribbean on your list. These guys, they're a cruise liner, and we know that they got impacted by the whole global situation, but their share price is slowly starting to creep up now. When you're looking at a cruise liner, for example, what you really want to look at is how much runway do they have, right, to survive. Now, these guys, they say they're burning through about 250 million of cash every month, but they've got over 3 billion cash on deck to support that, right? So they've got a decent runway, guys, right? And you know, we're getting some good news about vaccines, so there should come a time in the very near future where we see a spike in that share price because off the back of good vaccine news, right? When they start introducing a little bit of more travel, we're going to see a real like share price appreciation, and we want to position ourselves nicely now so we can experience those fantastic returns in our portfolio. So guys, they have good runway, they have a good brand, and they are set for takeoff as soon as we get any more positive news. So I want you to introduce Royal Caribbean into your portfolio. So guys, those are my 3 picks. Now it's always good to diversify outside of EV. I know we're big EV holders over here, Neo, Tesla, and that EV space is set for a fantastic next couple of years, right? And I'm very much looking forward to enjoying that ride. But it's always good to diversify, look into other sectors for growth, because there's a lot of money to be made in the stock market. And I want us over here just to position ourselves in all the different sectors where we can really get some good returns. Now, if you saw one of my previous videos, I told you that the tech sector is about to take off. So we want to be positioning ourselves into Apple, into Amazon, into Microsoft, right? Into Alibaba, because they're going to see a nice boom, right? And I compared their share price movement to a Tesla just before we seen the Tesla takeoff recently, where it's just bubbling, right? It's just settling until some good news, a good shift in the industry, and then that stock price is going to rise. So there's a lot of opportunity out there. So guys, check out these 3 companies, do your diligence on them, and consider adding them to your portfolio. So guys, once again, thank you very much for watching this video. Do check out that link down below. That's Trading 212. Go and grab yourself a free share of stock. Guys, I post every single day, so do hit that subscribe button, become part of Stockflix. We're approaching our first 1,000 subscribers. So guys, do check in, do be a part of the family. So guys, until next time, take care.